everybody, and greetings from Tokyo. It's my great honor to open the second day of the JatBit conference. My talk today will cover central bank digital currencies, and given how much is going on in this space and the duration that we have allocated for this talk, it will really try to distill the argument down to a few points, and I have to be very selective in what I'm talking about. So we're going to cover some of the fundamentals to level set. I've picked two use cases that I want to go into a little bit more detail into, and you will forgive me for cheering a bit for the home team. And thirdly, just a word on the public discourse or the lack thereof, and some of the measures that we're trying to take in fostering more of it. So to start with the fundamentals, I'm referring to a speech that Andrew Bailey, the governor of the Bank of England, gave in early September, because I believe it is quite insightful in terms of the current state of affairs, as well as what we can expect in the future. Andrew Bailey called his talk "Reinventing the Wheel with More Automation." So essentially saying central bank digital currencies wouldn't be a new thing, and it would be doing the same thing faster and maybe more reliably. It also includes a statement as to what the current environment is. And then if you look at today's world, outside of the use of cash, payments are made in commercial bank money using systems that settle in central bank money across the reserve accounts held by banks. So if you're doing a transfer from your bank account to your friend's bank account, the only thing that moves really is an entry in the reserve account that your commercial bank holds to possibly another commercial bank. And that is called commercial bank money, or in the CBDC context now, is a wholesale CDBC, compared to a retail CDBC that, with few exceptions, we really don't see yet today. So the characteristic of commercial bank money is that it's only usable in the domination of the jurisdiction you're in. So for Mr. Bailey, of course, that is pound sterling. And it needs to be convertible. It needs to be convertible at par, and it needs to be convertible on demand into fiat money. He recognizes that there are quite a few innovation vectors disturbing this picture currently. And he's pointing out three. And I want to go through these because especially the second one is an important distinction that I don't think many people necessarily appreciate. And so clearly we have crypto assets, and he's referring here to primarily cryptocurrencies like Bitcoin. And if you look at the function of money as a medium of exchange, as a store of value, and as a unit of account, I think most people would agree that in today's world, something like Bitcoin is used as a store of value, but not really as a method of payment. So Bitcoin for payments, or for that matter, any other cryptocurrencies, not very usable. And I tend to agree with them there. Then you have so-called alternative payments, or e-money, and there are e-money licenses in Europe, for example. The key point here is that while many of these startups are referred to as neobanks or challenger banks, they actually don't have a banking license. They have an e-money license, and that is key because they don't need to adhere to restrictive standards as the banks need to. There's no depositor protection scheme, and there are limited capital and liquidity requirements. Lastly, there's also no resolution or administration regime for these e-money licenses. And this whole recovery and resolution scheme framework was brought up after the Lehman collapse. Clearly, it was a hard time for many investors to get their money back and prove that they had their money. With Lehman, it almost took a decade in many cases. And so the whole system isn't tested yet as far as e-money goes either. Lastly, we've got stable coins, of course. And so they are obviously used today quite widely. Many of them, or the major stable coins, actually are outside of any regulation. And so when you see, as in recent days, legislation being proposed in the US that tries to cover crypto assets, digital assets, they haven't really gotten their mind around what to do with the stuff that is out there. And those of you who are in the crypto space clearly know which ones I'm talking about. So there's been a lot of discussion, obviously, through the proposal of Libra, which is now rebranded to Diem. And in the initial concept of Libra, it was a currency basket. And here, Mr. Bailey is very clear to say, we need to crawl before we walk, we need to walk before we run. So rather than doing anything that has multi-currency features or to multi-currency feature being asset-backed, let's start with a single asset and a single currency first, which makes a lot of sense. And in that regard also, I think was it between the Saudi Arabia and the United Arab Emirates or so, that was really a recent paper came out over the last week. That was the first central bank digital currency experiment that I have seen that actually dealt with multi-currency features. So that's worth taking a look at. Lastly, regulation, of course, comes into play. And the key feature here is that you can have different actors of the ecosystem in different jurisdictions. And so you're no longer limited to the notion of a nation state or a jurisdiction like the EU, which is a combination of nation states. So arguably you can have a global stablecoin operated, and I mean, technically you would have the nodes running right in one or multiple jurisdictions. You can have it denominated in any currency, and you have it utilized by consumers in a third jurisdiction. So you're at least dealing with three, depending on the operations model. And in order to get the hands around it, it's really not enough for a single regulator, single jurisdiction to press forward and trying to get their arms around it. So you need international coordination and you need an international regime around this for this to work. And I think these are some very useful parameters when we talk about central bank digital currencies. Now, I've picked two, which might seem a bit at extreme ends of the spectrum. One is actually already live as a central bank digital currency scheme, and the other has laid out a plan of how to implement this over the coming years. So the first example is the National Bank of Cambodia, which in October launched Project Bakong. Apologies if I mispronounce this, but it is a national bank's digital currency, and the digital currency is part of the reserves. So it's not additional money printed. Essentially, reserves are being held back to back the currency. What is noteworthy about Cambodia in the history of the country is that for a very long time, there was a parallel currency regime, which was the US dollar. And after stabilizing the economy and over the last decade, let's say, the government and the National Bank of Cambodia actually managed to create trust in the currency so that it is now the primary means. So the parallel universe doesn't exist anymore, but based on this history, they also want to avoid getting into a scenario where a parallel currency regime for practical purposes exists again. Another noteworthy thing, which is probably can be found in quite a few of the upcoming nations, is that in Cambodia, you have a mobile phone penetration of 150%. That means you have 3 phones for 2 people, while the bank account penetration is actually around a third. All right, so 5 times more people have a mobile phone, access to a mobile phone, than actually being in possession of a bank account and being part of the formal financial system. So what they've done here is not to eliminate the banks out of the system, but have them part of it. So the national digital currency runs on an app, and if you create an account on the app, you can choose which participating bank you want to open the account with. So it's a step towards financial inclusion, and it also includes the banks as part of the game. So they continue to be intermediaries. It's not like you have retail accounts at the central bank. So you have the central bank, you have the commercial banks, and then you have retail. From a technical perspective, sharing for the home team, as I said, this is built with support from Soromitsu, which is a Japan-based blockchain development studio. And they've been one of the first contributors to Hyperledger Iroha, when a Hyperledger consortium was founded first, and been very active in many aspects of digital assets really broadly. So fascinating example. This is live. Here, this is, I think, the example of the app that comes from the Cambodian Post Bank. So while we have all these debates raging across basically every single central bank, here you have one that's actually implemented it, and with parameters that I think many people can get very comfortable with, given the aspects of financial inclusion, of strengthening the financial services ecosystem overall. The second example, of course, given that I'm in Japan, I'd like to talk about the Bank of Japan. And on the one hand, and you see this here on the right side of the screen, the Bank of Japan has been a really adopter, experimenter in the digital currency space. As early as 2016, they partnered up with the European Central Bank and what is called Project Stellar to do some fundamental experiments around distributed ledger technology for financial market infrastructure. So that was 4 years ago. And there's always many concerns around how fast Japan is moving, whether it's innovative enough in the services sector. There's no doubt that it's very advanced in the manufacturing sector, but in the services sector, including financial services, it seems to be a very late adopter for many technologies. So the Bank of Japan here being very early. Now, regardless, they put out a paper in October. It's one of these many central bank white papers that you can read through. And if you print them, there's a whole stack of them. And it describes as the Bank of Japan's approach to central bank digital currency. It's important because they laid out a timeline and they're committing to naturally the start of the timeline as to when they're going to do some further experiments. And they split it down into two proof of concept POC phases. The first one is scheduled to start early in the fiscal year 2021, which in Japan starts always in April. So you might see maybe some activity early in the calendar year, but it's expected to be up and running really from April onwards. And the first phase of this proof of concept would focus on issuance, distribution, and redemption of a central bank digital currency with an unknown duration at this point. It would be a second phase that tests additional functionality. And lastly, there would then be a pilot program. And you could imagine that given everything that needs to be worked through, nonetheless, in Japan, you would need to have law changes because only coinage and banknotes today are legal tender at the retail level. So to have like an electronic Japanese yen would require law changes in parallel. And all the international discussions that are happening, going through these three phases of POC 1, POC 2, and the pilot program, is probably not going to be a matter of a few months. This smells more like 2 to 3 years. And maybe I'm not giving them enough credit, but that's what it feels like. So here's a contrast of an up-and-coming nation like Cambodia using these latest technology essentially to leapfrog and get ahead in building financial infrastructure with the latest technology. And you've got the third largest economy in the world, although they experimented very early, they're still very slowly getting into this space. And obviously making a mistake with the Japanese yen and the third largest economy in the world would be costly. So there are many more examples in every region of the world. And if you Google it, as I said, you can find plenty of material to read through. The last point I want to make is essentially that we believe there isn't enough public discourse around this topic. So some of that is very ivory towerish. There's central banks and economists involved, but not so much of the impacted parties, for example. And clearly, when we talk about digital money will also not only be used by humans. It's very clear that we're then getting into an Internet of Things and machine-to-machine payments, etc. So there, in this whole space, there's an overall lack of an vision for industrial application, let's call it. And industrial meant in terms of truly industry, whether it's financial services industry, whether it's automotive, whether it's robotics, right? There's lots of use cases and it can be very different. And in order to avoid unintended consequences, we need to be very thoughtful as to how we go about this. There's also fragmentation of all these players. Clearly, right, we see a bit of a differentiation between fully regulated digital asset markets and those that are staying unregulated, and that will probably continue. But there's legacy players, there's new players, there's different regions, right? And all of this kind of needs to be discussed much, much further. We also need to highlight the expertise that exists, and this is a multidisciplinary effort. So clearly, economists have a role to play. They've had a role to play in all of crypto through tokenomics already, but even here, it's much more important. There's technology expertise that needs to be brought to the table. So it can't just be an economics view. There needs to be a business view, the industrial view brought in, right? And how do you apply technologies like a distributed ledger, blockchain, to this vision also needs to be discussed. And all adjacent technologies. The innovation cycle has gotten so much shorter. And yesterday at this conference, we discussed DeFi and staking. So decentralized finance, or DeFi, is innovating so fast. There's no regulator who can keep up. And that brings us back to Mr. Bailey's comments, for example, as well. It's like, how do you regulate all of this? So coming out of the Frankfurt School Blockchain Center under the leadership of Professor Sandner, a group has been formed that is called the Digital Euro Association. It's very early days for this. I'm honored to be invited as a research fellow for the Digital Euro Association. And it's a group of people who really deep into this subject from different perspective, deep research, deep academic research practitioners, people who have their startups in this space. And overall, it should provide a platform to have a much broader dialogue around these topics and breaking down the silos. So I think it's a very good mission, and I hope I can contribute to that. As many of you who are listening to this, you can obviously look up the website and also be a contributor as well. Would be great if we had similar setups in different regions. Clearly, Europe, given the number of countries that are involved in the Eurozone, requires quite a bit of this. So this concludes my comments. Thank you very much. I'd like to thank the JatBit conference organizers for putting this together, RNS Solutions, and Dr. Shakir Mohammed for inviting me here today. And if you have any further questions or want to have a dialogue, here are my contact details and the contact details for Tokyo FinTech as a not-for-profit organization, and Exponential Finance, which is my own little fund. So wishing you all the best for the end of the calendar year. Stay healthy and in good spirits, and all the best for 2021. Thank you very much.